joining. We're really excited to have you here today. My name is Upi. I will be your host and moderator for this session. And today we're going to be talking about faster and safer payments and what's next for them in 2022. So we were thinking to start the session off to do something a little bit different. If you could go to the next slide, please. We wanted to, since we're talking about faster payments and speed, we wanted to test everybody's faster payments knowledge and see who could be the fastest person to answer this little quiz question about faster payments. So the question is, what was the first country to roll out real-time payments? And in order to answer this, you can use the Q&A function, which should be at the bottom of your screen. Please answer non-anonymously so that we know who the winner is. And I've been told that this is a bit of a trick question. It may not be the country that you think it is, so please think carefully or Google carefully, whatever you have to do. And the winner, the first person, the fastest person to win or to answer correctly will get their choice of either a handy Proof Yeti, which everybody loves, or a Proof hoodie, which would be really nice for the chilly days to come. So I see some answers coming in. Interesting, okay. A few more, let's give it a few more seconds to get people's answers in here. And remember, think carefully because this is a bit of a trick question. It may not be the country that you think it is. All right, so we've got a lot of answers here. So I think we can go to the next screen. And the answer is Japan. So actually quite a few of you got this answer right, so very impressive. So Japan actually developed the first real-time payment system way back in the 1970s. So it was before the UK, China, and India. And I'm looking at, we have a bunch of responses here, but the fastest person was Yuri Abraham. So congratulations, Yuri. If you can email me at yuka.yoneda@proof.com, you will have your choice of a prize. So thank you everyone for playing, but yeah, quite a few of you got the right answer. So thank you everybody. All right, I think we can move on to the next screen. So very quickly, we encourage questions. We love to hear your questions. The panelists want to hear your questions. So please use the Q&A function that you just used to do the quiz to ask a question. If you have it, I will be monitoring this, and we will also be saving the last 20 minutes of our session for Q&A. Also, if you would like the recording, don't worry, we have your back. We will be sending the recording out to all of our attendees in the next few days. Next slide, please. All right, so I know everyone's eager to meet our expert panel. So first off, I'm really excited to have Peter Tapling on the panel today. He is a well-known and well-respected expert in the payments and identity space. You may know him as a serial entrepreneur who started companies in security, risk, identity, and payments, and he now runs PTap Advisory, which advises companies in the space. He's also a member of the US Faster Payments Council and has served as an executive at companies such as EWS and Authentify. Welcome, Peter, and for the benefit of our audience today, would you like to give us a brief overview of PTap Advisory?
Thank you for having me, Yuka, and you gave a great overview. I see a lot of I see a lot of very familiar names in the participant list, so it's great to see all of you. So PTap Advisory, if you think of an intersection of identity fraud and risk, payments and innovation, that's kind of the world I work in. I provide advisory services to investors, financial institutions, and to providers in the faster payment space. Been participating in particularly the faster payment space since 2014, when the Federal Reserve kicked off their Payments Improvement Initiative, served on the steering committee for the Secure Payments Task Force, and I've been a member of the US Faster Payments Council since its inception, served on the board of directors, and I'm currently a member of the board of advisors.
Thank you so much, Peter. We're really excited to have you here today. Next up, you may know her from her many appearances and mentions as a fraud expert on BBC News, NPR, American Banker, USA Today, and most recently Forbes last week. She's the VP of Client Experience and the Fraud and Cybercrime Advisor here at Prove. And before that, she was the head of fraud strategy at Vero Bank. And she's also held roles with USAA and PayPal and served on the Secure Payments Task Force with the Federal Reserve. Marianne Miller, it's so nice to have you here today. Would you like to give us a brief overview of Proof?
Yeah, that'd be great, Yuka. It's great to be here today and share the stage with Peter and Amit. And I think this is a fascinating topic and really relevant and continues to be relevant across the world. In a nutshell, Proof is a modern way for businesses to confirm the identity of the person that with just a phone. And we do this very elegantly. We help businesses acquire more customers quickly and fastly and safely. We also help them engage with their existing customers. For example, enable adding a new beneficiary or a new payee for a faster payment, which is a very critical process. And during that, we manage fraud and risk at the same time and do that safely. We do that across many different businesses and organizations. We are deployed at 8 of the top 10 banks, 3 of the top 10 retailers, 3 of the top healthcare companies. We are now moving into crypto. So we have 2 of the top crypto exchanges, and of course, insurance. We have wide coverage there in the insurance organizations as well.
Thank you so much, Marianne. Excited to have you here. And next, I'm a bit starstruck to have Amit Goel on the line. Amit has been highlighted as a top 100 fintech influencer by numerous agencies such as Thomson Reuters, PwC, and Next Money. I see so many people retweeting him that I can't even keep up. He's also the founder of Medici, a top fintech publication, which was acquired by Prove in 2020. Welcome, Amit. So nice to have you here.
So glad to be here. Looking forward to it.
Awesome. So thank you, everybody on the panel. I think we can jump right into our questions now. So, Peter, the first question is for you. The title of the session is Faster Payments. For those of you who may not know, what actually is a faster or real-time payment?
Sure. So I'm going to give you 2 definitions. The Bank for International Settlements refers to instant payments. These are payments where money is moved from one bank account to another bank account, cleared and settled actually between the banks in real time being within several seconds, on a 24/7 by 365 basis. That's very specific to kind of the modern faster payment rails we think of in the United States as RTP, faster payments in the UK, UPI in India. The US Faster Payments Council kind of broadens that definition a bit, and it includes push to card capability for debit cards, as well as things like same day ACH, where faster is defined as it's faster than it used to be. And I think in this whole faster payments world, we're all still learning. Every faster payment scheme around the world started with a white paper. In the white paper, time was spent identifying the use cases for how the faster payment scheme would be used. And in almost every case, the largest volume use case ended up being something that was not identified in the white paper. So if you asked someone, would you like your money now or would you like your money later? You would always answer the question, I'd like my money now. And so as these systems come to market, we'll continue to see innovative ways that businesses and consumers choose to use them.
Thanks for that background, Peter. And can you tell us what the growing real-time payments landscape looks like in the US as we move into 2022?
Sure. So particularly in the US, of course, the same day ACH, I'm going to use the US Faster Payments Council definition. Anybody who's not a member of the US Faster Payments Council should be, please join. But the same day ACH has been in market for several years. It is still a batch system. It is not 24/7 by 365, still operates on essentially banking days. But what they did is instead of having the 2 or 3 day clearing window for an ACH transaction, transactions that hit a certain time frame, there's 3 different same day windows during a day, will go through the ACH process for clearing in that day. So in theory, you would be able to have the money the same day, thus same day ACH. Push to card is something that's become very popular. For instance, for same-day payroll. I'm an Uber driver. I've driven for 4 or 5 hours, and I want to get paid out as I end my shift. That's an application of real-time payments, and push to card is a popular way to do that across any of the networks. And of course, when we talk about instant payments, that's all the buzz right now. It's the existing capability that's available in the market today is RTP, offered by the clearinghouse. RTP is a true 24/7 by 365 single transaction instant settlement service. As a consumer, how would you have seen this? This is a great example of one of the areas where the use case wasn't written up in the white paper, but it's a very popular use case. PayPal has a capability that if you want to cash out your money in PayPal, and they recognize that your bank can receive real-time payments, they'll give you the option to receive your money instantly. And so that actually drives a lot of volume in the market. But I think, don't quote me on the numbers, but the numbers I've heard are that RTP covers something north of 60% of the demand deposit accounts in the country today. And they have something on the order of 400 financial institutions either connected to the network or in the process of getting connected to the network. I should say that FedNow, because the Federal Reserve is entering this market, Federal Reserve has announced they're coming out with the FedNow product. The FedNow product is not in market. That's scheduled to come into market the year after next in 2023.
Got it. Yeah, maybe we could touch upon FedNow. Again, we're going to have kind of a predictions session towards the end of the session. So I would like to come back to that. I think a lot of people are going to have questions about FedNow. But also, Amit, so I know that India is very active and they're actually kind of ahead of the game, right, when it comes to real-time payments. Can you tell us what real-time payments look like in India?
Yeah, sure. So it's called Unified Payment Interface in India, UPI. The transaction volumes and value is just skyrocketing. It's doubling, tripling every year. In terms of numbers, around $35 billion, 35 billion transactions have happened during this year till the end of November. And we are going to touch like $1 trillion in value being transacted. I'm talking about real-time payments in the true sense, when money is being sent from a bank account to another bank account in real time using mobile number or some alias, right? So that's how they define real-time payments. India already had instant payments since 2012. And in 2016, UPI was launched, which is in true form a real-time payment system. Some of the key things about that is that while many other real-time payment systems which were launched in, say, Japan or UK or Singapore, they had things like account aliases, being able to send money from bank account to bank account, or QR-based payments. But a lot of them were missing one or two key elements. One was allowing third-party apps to also use the UPI platform. So that has been one of the cornerstones of success in India, because NPCI, the organization which runs UPI, opened it up to Google and WhatsApp and lots of other fintech companies in India, and that's where the boom came from. Really, it was truly open innovation, and there were functionalities around request to pay. So anybody, any merchant could actually sort of request to pay and get paid. So those kind of things and use cases actually sort of worked really, really well outside of just plain vanilla peer-to-peer payments. And today we are seeing 130 million transactions a day on the UPI platform. Wow.
Thanks, Amit. So we've heard a little bit about faster payments in the US, about India, and Marianne, you were on the forefront of faster payments in the UK as the Director of Fraud for Lloyds Banking Group. So what were some of the early lessons learned in the UK that you think still apply today?
Yeah, in the UK, those lessons do definitely still apply today. What was very interesting about the way the UK approached faster payments, now it's over a decade ago, is that I call it, and Peter and I refer to it as the cakes and balloons moment. The entire industry went live at the same time. So this was all of a well-coordinated and very impressive project where all the major banks in the UK actually got together and said, we are going to put together a central payment platform, and we're going to orchestrate account to account, higher upper limit payments across the whole industry. And there was a moment in time when everyone went live, and there were balloons and cakes in all the offices, and everyone went great. And consumers really adopted to the platform very quickly. Unfortunately, it was a cakes and balloons moment for the fraudsters as well. They were ready. And some of the early lessons learned were that, and some of those lessons were preceding and leading up to faster payments. So in that orchestrated event, the banks all had their own choice of identity, authentication, and fraud systems. So not all of that was prescribed. So everyone got to choose how they were going to protect faster payments. Personally, at Lloyd's Banking Group, when I was director of fraud there, I took the approach that the customer experience mattered. And I'll give an example. Some of the banks, and I still have it to this day, and I like to show this because and I'm not picking on Barclays, but some banks actually gave this to their customers. Can you imagine carrying this around in your pocket, your handbag, and having to have this every time you logged into your bank account to make a faster payment? And you slipped your debit card in here, and you answered an authentication response. Quite clunky, quite not a great experience. So I took a customer-centric approach to security and really wanted the customer's experience to matter as well. So that is really important. If you're getting ready to launch a faster payment, it was no different back when Lloyd's and the whole UK launched than it is today, to think about carefully how your fraud strategy, how your identity strategy, how your authentication strategy will be orchestrated. The other kind of important lessons learned is there was an underestimation by executives and at the very top levels of the banks around the relationship between fraud and speed. Fraudsters are very attracted to speed, they're attracted to popularity, they're attracted to large sums of money where they can access it. And the fraudsters had accumulated credentials from data breaches. They were ready to go on day one of faster payments. So it's really important not to underestimate not only your customers' love of speed and service, but the fraudsters' love of speed and service. So it's really important to think about carefully, what are those investments, what are those building blocks that I need to really ensure that my bank has good safety and soundness, but also my customers are protected as well. And then lastly, I'll say that data mattered. So when you're really looking at speed, you really need to look carefully at data lineage, data validation, and how data is consumed by what I call the fraud brain. And your transaction monitoring systems will take signals from your authentication events, like biometric signals, or they'll take phone signals, they'll take different kinds of events. Those signals all need to be monitored for their liveliness, their predictiveness, and their delivery on time, because they're feeding rules engines and they're feeding models, and those models and rules engines need to be accurate. So there were some early lessons learned where data feeds dropped and there weren't signals to tell the fraud teams or the engineering teams that the data had stopped delivering, to keep the robustness of the models in tune, or the robustness of the rules in tune. So it's really important to make sure that you have those key elements to understand when those systems are down and when you need to remediate any issues with the data.
Thanks, Marianne. Yeah, you touched upon some great points and takeaways there. Especially, we've been hearing the phrase faster payments means faster fraud, right? So I think, Peter, you were the one who introduced us to that phrase. What's your take on that?
Yeah, it's a popular phrase, that's for sure. I mean, in some case, bad guys love speed more than consumers and businesses do, right? Because if you're a bad guy and you rob a bank, you don't want to walk outside the bank and smoke a cigarette outside the door. You're going to get away from there as quickly as possible. And bad guys also like things that are new. because things that are new, there's confusion every step of the way. Consumers don't know how it works. The operations group in the financial institution doesn't really know how it works. And for everyone that's on the phone, raise your hand if you know of a release one of any software product that worked perfectly, right? So things don't work exactly the way we want up front. Now, the faster payments means faster fraud isn't necessarily true, but what is true is faster payments drive the need for faster decisioning on the part of the parties, the banks who are moving these payments. And I'm going to try and give you a little visual. If we compare with the ACH is a batch system. Payments are collected during the day. There's a point of day in which a whole bunch of payments are put into a bucket. There's a fraud and risk management system at the financial institution that's originating the transaction. They're going to run through every transaction with their fraud and risk management system. That bucket's going to be handed off to the operator. The operator then gets to do some fraud and risk management. Individual payments are then sent to the receiving financial institution. They have time to do something. The process of processing, the process that an ACH transaction goes through can take up to 2 days. And during that process, individuals along the way, participants along the way, the operator and the financial institutions can raise their hand and say, wait a minute, I think there's something quirky about this payment. Some people don't realize this, but the ACH network has these rights of rescission windows where 60 days after a transaction, up to 2 years after a transaction, in some cases, participants in that transaction could say, wait a minute, something's wrong with this transaction, and have an expectation to get their stuff back. That doesn't exist in real-time payments. The way real-time payments work is somebody comes up and says, I would like to make a payment. The financial institution responsible for making that decision needs to make the decision that they're going to take money out of the bank and it's going to go, and that's it. No ability to do any further review of the transaction and no ability to get the money back, right? And so I like to call it the who of the payment. The who of the payment becomes critically important, whether it's a consumer payment, clearly when it's a consumer payment, because that who should be the owner of the account. But even in a business payment, making sure far too often today, within accounting teams at businesses, there will be a shared credential that they use to log into a bank account. And that becomes really dangerous with faster payments. Kind of a side comment here, in the payments industry, we have grown 2 generations of people who use payments who are operated under Reg E. And under Reg E, we're all familiar with the product that gets marketed by the credit card companies of zero liability. If I went out to my online provider and I bought something and I didn't like it, I could call the credit card company. If I see a charge that I don't recognize, I call the credit card company, I get my money back. That concept of get my money back doesn't exist in faster payments. And so while Marianne talked about the relatively not so great experience of having hardware tokens and stuff like that, yes, they were very secure, but they were not a great experience. We've really shifted towards experience. And so now we have to figure out that balance of how do I get the security that I want, the assurance that I want that I'm dealing with the right person, but not have the really terrible experience.
Yeah, and I'd like to add on to that, Peter, around the who of payments. And what I think is underestimated is the fact that your onboarding processes are really connected to your payment processes. In other words, if you don't know that the person that you're onboarding into your institution is the person that they say they are, then speed becomes a bigger issue. And it can include the creation of mules, the creation of, the enablement of more money laundering, and also, the mule accounts can come in and exploit your internal systems, exploit the ACH rails, exploit by depositing bad checks. So it's really important that not only that you understand for faster payments who's authenticating at the time of the payment, but that onboarding experience in your business, in your bank, in your financial institution, at your fintech is secured by the front door.
And Yuka's going to yell at me because I'm going to go a little off script here. But you brought up the idea of onboarding, and we've talked a lot about the who of payments. And we have a great resource here on the call, Amit, because in India, they created a national identity program called Aadhaar, and every Indian citizen has a relatively strong identity. So Amit, could you comment on that a little bit, that kind of setting an anchor for who people are?
Sure. So Aadhaar is really a dual mode biometrics, fingerprint and retina scan, which has been established as a digital ID officially for 1.3 billion people. It has already been created for practically everyone. When it comes to, say, real-time payments, it has an indirect role to play. And then there is a very interesting place where it all comes together. Why I say indirect is because it helps you to open a bank account sitting at home using this digital ID, which is Aadhaar. But because real-time payment systems are actually built on top of bank accounts, so usually they rely, at least for authentication, on SIM and device binding and a UPI pin. So that's how they do two-factor authentication. So Aadhaar does not come into play when you are actually doing a real-time payment transaction using UPI. That's where they use UPI pin and SIM and device binding. But then all of this comes together, what we call as India Stack, which is actually leading to all the digitization efforts in India. So India Stack is really Aadhaar, which is a digital identity, UPI, which is cashless, real-time payments, and then there are a few other things like DigiLocker and all that. So that has really greatly benefited the country in terms of the digital move as a whole.
That's super impressive, Amit. I'm just thinking as you were talking and explaining how well India's orchestrated this kind of central identity is, Peter, where are we in the US? We're not only in the US behind when it comes to faster payments, but we're behind when it comes to, digital identity and having some central place to really understand our identities at a national level. I think it's a challenge that we have both on public and private sector. And I think, it's going to require a lot of innovation in the coming years.
Definitely. And Marianne, do you have anything else to add on? You've been a leader in the fraud space, and at multiple tech companies, you've implemented identity authentication and fraud strategies to enable businesses to offer new and faster products. And you talked about some of the key building blocks. Anything else to add there?
Yeah, there's quite a few building blocks to think about. So depending on your use case and how you'd like to authenticate, there's lots of innovative industry, there's lots of innovation out there in identity. Prove is one example of that. We have ways to be able to confirm that the digital identity that's being presented in the flow, whether that's onboarding or whether it's an authentication event or payment event, is actually being conducted by the person who they say they are. That's an important aspect. That's an important question to ask yourself. What building blocks do I have to really confirm that during an actually real-time event? And what building blocks do I have to actually confirm that in real time? There's other building blocks that you can use. Those are other signals like device reputation, biometrics is definitely, behavioral biometrics are other signals that are definitely being deployed today and showing lots of degrees of success. And of course, and something that's really important as well is transaction monitoring. During the deployment at Lloyd's and preparing for faster payments, I deployed a platform called cross-channel transaction monitoring. We can't forget the fundamentals of looking for anomalies during events, whether that's changing the address, changing a phone number, now allowing self-service. These other events all interact with the ability to offer faster payments due to the fact that it's securing the customer's account. So those building blocks are still critically important today. And thinking about, it's not trivial, thinking about how you bring together, and Peter and I have talked about this on other webinars, to build the fraud brain, and really looking at that fraud brain and that risk brain, looking at those events. It takes all the time of bringing those data and signals together in a central way to be able to actually determine that risk. So even if your financial institution takes the first steps of working, bringing one or two channels together to bring that customer view together, it's really critically important to think about that as preparation steps to start to look at how you can enable. And it's, one thing that's really important is, we're talking about faster payments, but the exciting part about faster payments are the kinds of products and services you can offer your customer. You can offer, the instant issuance of a debit card, or the instant payment to your landlord for rent, or the instant payment to your roommate, for your half of the rent. So there's so many things that, we don't think about today that are so slow and so cumbersome because the limits aren't high enough or the speed isn't fast enough. So these risk systems that you put in are really, the end purpose of those are to really enable your business to be competitive.
Thanks, Marianne. And you just touched upon something that's very relevant for a question we just received. So somebody is asking, what are the top use cases that you see for faster payments, and are they what, is expected? So I think maybe I'll ask Peter to take this one. Are there any, top use cases that you see for faster payments right now?
Well, one of the, in fact, I'm going to kick back to Amit in a minute here. I'll finish my thought, but one of the challenges in the United States, we did not have a cakes and balloons event, right? There was a press release put out by the clearinghouse that says, hey, we did our first transaction on RTP, and it was literally one bank sent a transaction to another bank. As a consumer, I kind of defy you to show up at your financial institution and say, I'd like to send a faster payment. One of the ways that financial institutions are mitigating their risk today is by really not making this product broadly available. So I think we are going to start seeing a variety of capabilities that are coming out. Again, that PayPal use case for disbursements out of your PayPal account is a great example. I talked about real-time payroll, same-day payroll coming through push to card. Some companies are looking at RTP to be able to do that. In the state of California, if somebody leaves their employment, there's a state law that says they have to get their pay that day. So real-time payments is a great use case for that. But in my mind, those use cases are really kind of at the edge. Now we need those edge use cases to kind of begin driving the volume. But as these innovative products that Marianne alluded to begin to come to market, we will know we have succeeded with faster payments when we can drop the word faster, when we just call it a payment and it just happens and it's the way we expect it to go. And this is where I'm going to kick it over to Amit. And I forget what they call it, National Payment System, NPS. The real-time gross settlement system in India has existed for several years. UPI is relatively new, but what UPI did is it created that on-ramp that a vast population of people could easily access this service. And so we'll let Amit talk about that experience in India, but I think that it's those on-ramps to be able to use the system that when we begin seeing those, that's when volumes and activity will really take off. And by the way, that's when bad guys get really interested. Amit?
Right, Peter. So, I think you rightly described, in fact, out of the 40 billion transactions that will happen this year, I think more than 80% of them are very small transactions, less than 200 rupees, which is like, less than $3. The reason for that is because of some of the things that you explained. We started in 2016 with UPI practically from 0 transactions to today when we are doing 130 million transactions a day. The use cases also changed over a period of time to the question that was asked. I think it all starts with peer-to-peer payments. That's the easiest. And then the entire industry was sort of very motivated to bring on, merchant payments, which was the next thing to take off. A lot of bill payments. Something very interesting and specific for India was all the e-commerce payments, were made at the time of delivery. So there was like cash on delivery earlier. UPI has kind of completely sort of eliminated that, to Marianne's point earlier, that the customer can actually see the delivery happening, which is why they opted for cash on delivery. But now using UPI, you can pay in real time. So it's almost like using digital to replace cash on delivery. So that was a big use case. Today, there are a lot of business use cases where merchants everywhere, mom and pop shops are accepting real-time payments. It's getting into payroll. It's getting into sort of funding the field force. Doing collections for lending companies. And some of the more fascinating ones are around things like half of the money that went into IPOs this year in India were sort of funded through UPI. Half of the entire value, which is actually massive. It's like billions of dollars in every IPO.
Yeah, those are really fascinating. One thing that I would like to mention, and we haven't mentioned Canada in this conversation, but Canada has a very impressive program called the Canada Payments Modernization Program. I think it's been about a 7-year program, and they're modernizing both retail, commercial, and treasury payments. And I was thinking about our recent pandemic and the fact that if we had modern ways and safe ways set up to get emergency funds to our citizens through a faster payments rail, this would be much a needed advantage for us here in the U.S. Canada's doing a really good job of really setting up the right infrastructure for that in the future. And that's another opportunity and another use case that we don't think about. The other use case that I think about is sometimes we want to give cash as a gift. And it's kind of boring today, but wouldn't it be nice to attach a card through a payment message with a great message and a gift of cash? And today that's not easy to do. You're writing out a check or you're sending a payment, but you don't get to send any kind of message with it. I think there's lots of opportunities to innovate in this space, not only for the betterment of the citizens of different countries, but also for the ways we like to actually give.
Yeah, and one of the things that we learned when we launched Zelle is, again, this concept of the use cases that we think are going to be the real use cases end up not being the real use cases. If you look at the average dollar volume of say a Venmo transaction, and you compare it to the average dollar volume of a Zelle transaction, Venmo transactions are in that kind of $25 to $50 range, and Zelle transactions are in the $250 to $300 range. Why is that? Well, it's because the one characteristic of Zelle that's unique is that money moves from my bank account to your bank account with money available in real time. And that's an attractive feature, particularly when you're sharing rent payments or making a car payment or doing something that is higher value. Changing thoughts a little bit, one of the challenges we have in the United States is we have we have way too many choices. There's not no banker will tell you that people walk into the lobby of their branch and say, I would like to make a faster payment. Like, consumers don't think that way. Businesses don't think that way. But again, I go back to the beginning and say, if somebody asked you, would you like your money now or would you like your money later? You're always going to say, I'd like my money now. So it's really incumbent upon the industry to create those on-ramps, to create those innovative products that where consumers are like, oh, why do you do it this way? Why do it this way? Because it's the easiest, strongest, fastest, safest way to do it. And so, today you can, in theory, send a real-time payment as a consumer. You walk into your bank and you say, I'd like to send a wire. So anybody that sent a wire from a financial institution recognizes that's a really painful process. And so I think one of the challenges, and it's Mary Ann's job, client experience, but one of the challenges we have as an industry is it should always be a smooth experience. It should always be the same experience. I should be making choices about how I want to pay, not because one's on a Visa network and one's on the Zelle network and one's in PayPal, but it's the way I want to pay, and it's easy for me to pay the party on the other side.
Thanks, Peter. Switching gears a little bit, I'm getting a few questions about what faster payments will look like in 2022. Are we going to see any new innovations? So I'm wondering if we can go around the panel, maybe starting with Amit, about predictions that you might have for 2022 for faster payments.
right? See, given I'm in India, which is sort of leading in terms of real-time payments and what's happening, I would say the future is already here, and we are seeing some amazing applications. I'll just name a few. I talked about IPOs earlier. Right now, what's happening is that given NPCI decided to open up the platform to sort of all the tech companies and developers and all that. So there's a lot of innovative use cases which are coming up. For example, India had only 40 or 50 million credit cards, right? Unlike America, which runs on credit cards, we never had credit cards, and for a country of 1.3 billion people. So what people are trying to do is create a credit product on top of UPI, which can do instant sort of funding at the time of purchase. So that's kind of UPI 2.0, as we call it. It's the next version. It supports a bunch of very interesting things like one-time mandate, where think of it like a smart contract from the blockchain world, where you can almost define that if the condition is met, then the payment will be made, right? So that's like a one-time mandate. They are doing credit products, as I said earlier. You can link your overdraft accounts using UPI. So it's going into the direction where it's not just any longer a payment product. It also becomes a credit product. It also becomes a lot of other things, alongside.
Marianne, can we hear from you next?
Yeah, Yuka, I think your question is really good, and I think there's a couple different aspects to it. I think first, there's one from the product innovation side, what we might see in the future in 2022 around payments. And I think that those financial institutions who start to think about and work with their product and digital banking teams, start to look at the kind of products that they want to be, to launch to be more competitive, say more competitive with the fintechs, or actually more competitive just in general, or just offer better services for their customers. We're probably sitting around the table thinking about what is it that we need to do? What transformation do we need to make in our payment systems? What transformations do we need to make in the digital experience of the app? What transformations do we need to make? Because there are opportunities for a better and easier experience in many, many financial transactions, interactions. I also think that, I'm speaking to the people on the line that work in the ranks of authentication, identity, and fraud. It's important to continue to educate your C-level at your company. And I think there is still and continues to be an underestimation of the types of investment and the types of systems that are required to make sure that they safely enable the systems. One of the reasons, and today Lloyd's Banking Group was so fortunate to be able to offer an easy customer experience, is because the executive team got around the table and really broke that bottle of champagne and said, we're going to support this and we're going to invest in it. And today it's very easy for me to log into my Lloyd's account and initiate a faster international payment and a much less inter-country payment. So those investments actually helped those banks really enable more products across their whole entire portfolio. So I think it's important, for the product teams to keep thinking about how they can make the customer experience better, but for the fraud executives to continue to educate their C-level about that importance.
Absolutely. Peter?
Yeah, so a couple of things. First, I'm going to piggyback on a comment that Amit made that he didn't comment on, but I think there was another systemic factor in India that caused UPI to become comfortable. A couple of years ago, India did away with their lower denomination bills, right, Amit? And so, think about in the United States that we no longer had a $1, a $2, or a $5 bill, that the lowest bill was a $10 bill, which means that if you had to pay somebody at that lower amount, you had to have a way to do it. I bring that up as an example of kind of a systemic factor, an external factor that drives people to be using these products. So that's kind of one, is that when it comes to use cases, I think that RTP is a bank-to-bank system, and a lot of the innovation that we're seeing in financial services today is not coming from the banks. It's coming from overlay services that are being driven by fintechs. And so I think those companies will come up with new, interesting, creative ways. And this idea of instant payments, 24/7 by 365, instant clearing, my bank account to your bank account. I think that various use cases will come up driven by products that offer them. Mary Ann brought up the cross-border transaction. There's something on the order of 50 faster payments schemes around the world. All of them came to market operating solely within the jurisdiction of the central banking authority. So India's system works in India, and the US's system works in the US, and Canada's system works in Canada. And as a prediction, I think one of the things we're going to see a lot of activity on in 2022 and beyond is bridges being built between those systems so that we can do true real-time gross settlement international transactions with foreign exchange all taken care of. There are, I think, 2 corridors which are live. I think you can go Singapore to the Philippines, and I think there's 3 countries in the Nordics that have bound their systems together. But as of today, there's no way that you could take an RTP payment and have it land in a different country. And some of those conversations are starting, but that really begins to change the game a lot for how people want to interact with their money.
Thanks, Peter. So before we jump into our Q&A, we are a little bit behind schedule. Can we—
Shocker.
I blame you, Peter. I'm just kidding. Can we go around the panel, maybe starting with you, Peter, this time, to share your final thought or takeaway for our audience about faster payments before we jump into our Q&A?
Yeah, well, I mean, it's been a great conversation. I think that, do you want your money now or do you want your money later? Faster payments, I believe, are the future. A lot of times we talk about the modernization of the payment system. Debit cards, the ACH, those were brought to market 35 and 40 years ago, pre-internet. And so there's a term in the market called the Internet of Value. It's largely tied to kind of the cryptocurrency space, but reality is people want to interact with their money the way they interact with everything else, right? Everybody's on the web right now on this webinar. And so having the ability to move value and to not move that value through multiple hops where I'm counting on service providers, where the service provider could be PayPal, the service provider could be my credit card company, whatever, but really move money from my bank account to your bank account, that becomes very attractive. And it has the opportunity to make payments much more efficient.
Thanks, Peter. Mary Ann?
Yeah, the last thought I'd like to leave the audience with, especially, is to not underestimate and to make sure that you're paying attention to your digital onboarding processes, not to underestimate that they have a direct relationship, again, with your faster payment strategy. That really putting together your end-to-end roadmap really includes working really closely with your onboarding team as well, not working in silo just with your payments team.
Thanks, Mary Ann. And Amit, it looks like you get to have the final word.
So I think real-time payments is a no-brainer, right? 6 years back, we had it in 14 countries. Today, we have it in 56 countries. I think it will spread far and wide. What I've learned at Prove, being a part of Prove, is that you have to think beyond that, right? Because fraud follows speed. And so what we are seeing in India today is a lot of authorized push payments fraud triggered by social engineering. Also, sometimes people send money to sort of wrong UPI handles or wrong mobile numbers, and they turn out to be real ones. So the money gets transferred, and the recourse part of it is still being figured out, right? The nuances of it. I think this is the time to start thinking about how do you better the instant risk decisioning when you have real-time payments at such a scale. I think that's where my mind has also started going, since I work with guys like Mary Ann and others who are like sort of experts in fraud. And that's what I think India is thinking about, right?
Thanks, Amit. All right. Let's go over to some of our questions that we're receiving. So the first one is, how secure are payments made through various online channels, specifically utility payments made through digital wallets? So maybe I will ask Mary Ann about that.
So if we really look at any kind of payment made through a digital experience, whether that's in an app or a wallet, the answer about how secure they are really comes down to your layered security approach. So that's up to each individual bank, financial institution to work, again, as we've talked about on this webinar, to put together the right layers and the right kinds of controls in place. So the question is how secure are they? As secure as you want to make them. And it's really important that you do put those layers in place, even if you just take the first step to start to improve that security situation, that you really need to put those layers into place.
Thanks, Marianne. And we're getting another question about FedNow. I think you did touch upon this, Peter, but the question is, when can we expect FedNow to be live in the US?
The million-dollar question. So the Federal Register notice that came out that announced FedNow, announced the delivery date as 2023 to 2024. The Federal Reserve went public, removing the 2024 part. So they are targeting 2023 at this point. I think that the odds that there will be some number of banks sending some number of transactions over FedNow in 2023 are pretty high. They have a pilot group that is something on the order of 100 companies right now, both service providers as well as financial institutions, that's working with them to kind of do the development to make themselves capable of doing FedNow at the time that FedNow is available. So I do think that they're going to be able to raise a flag and say we are in market in 2023. The question becomes, how broadly deployed is it? I think one of the impediments in the US to broad adoption of faster payments is the lack of ubiquity. I mentioned earlier in the call that RTP has some 400 banks that are available, that are on the network. In the United States, we have well over 10,000 financial institutions. And so if you bank at one of those other 9,600 financial institutions, you have no access. It's not an option for you. And so I know that the clearinghouse is working aggressively to try and get as many people, as many financial institutions as possible on the network. I know that the Federal Reserve has programs in place to accelerate, as soon as they get to market, accelerate the number of people who are on the network. But I do think FedNow will be in market. I'm going to go out on a limb. I do not think that the day they come into market that RTP and FedNow will talk to each other directly, which means that we now have a period of time where I'm either this kind of payment or I'm that kind of payment, which again kind of acts as an impediment to adoption.
Thanks, Peter. Amit, this question is for you. You talked about UPI being used for IPOs. Is that safe?
It can be safer. I think we are looking forward to sort of launching Proof in India at some point of time for that reason. But I think what they do today is, for any UPI transaction, they do SIM and device fingerprinting, and they do a UPI PIN, so it's two-factor authentication. It's quite safe, but then there are, some newer type of frauds which are coming in, APP and other social engineering led, which which have to be sort of dealt with. So there is improved technology in the market. We have seen that. Yeah, but at this point of time, what they're using is quite safe. It can be safer.
Thanks, Amit. There is another question. I think, Marianne, I will ask you to answer this. Are there any plans to introduce a digital identity in the US at the federal level?
So I'm not aware of any discussions. I think that's an ongoing discussion as an industry that we need to continue to have. There's certainly discussions probably going on in different areas. There's different probably desires whether consumers would accept that, as a central identity. And that's probably the biggest question of whether American citizens would say, I want a central identity network managed by the government. And most of the time you'll say there's probably going to be a negative response to that. But I think there's a lot of opportunity for private sector to take on that particular kind of initiative in a safe way. And again, I think that it's absolutely needed. We saw from the large amounts of fraud during the pandemic for unemployment insurance and in PPP loans that resonated from public to private sector. And that we call it in the fraud industry, we're calling it the big money grab. And those numbers continue to rise. Those affected American consumers, in many, many ways. And many American consumers who don't know their identity was actually used to this moment, and may find out in the coming years through other processes. So I think that that consumers will actually push for better identity processes. They're going to want to make sure that their identity is protected. But I think it's going to really take all of us as an industry to continue to have these conversations and to really look at ways that we can actually create better identity processes.
Yeah, if I could tag on to that, back in the early to mid 90s, kind of at the dawn of the internet, where websites were first starting to come out, there were several initiatives under the GSA, under NIST, under W3C to create a kind of national identity standard. In fact, the Real ID Act is what ended up putting this gold star on your driver's license, ended up just being a standardization of the data that was associated with a driver's license around the country. The original Real ID was intended to be a federal identifier. It was actually the ACLU that essentially torpedoed that for a lot of the reasons that Marianne talked about, right? Hey, we're here from the government, we're here to help. There's not a lot of trust. In the United States, we're at our core very libertarian. We want to have control of our own life. That makes it really hard for financial institutions and businesses because everybody's doing it slightly differently. There's always two sides to a transaction, and being certain of the identity on both sides of the transaction is difficult. I know what I did, but I don't know what you did.
Thanks, Peter. And we're coming to the end of our time. So maybe just one more question. Mary Ann, the fraud threat landscape continues to evolve, affecting financial institutions and their customers. What are some of the top threats we need to look for in 2022?
Well, this list is rather long, Yuka, and I can tell you that we continue to see fraud threats evolve, as, again, more products are offered and as the sophistication. What we can say is that during the pandemic, that there's really been a new generation of fraudsters that will really have honed their skills. So we'll start to see, and what we are really dealing with right now is the rise of scams in the US. That's starting to become a big topic and a big issue. And I think that that's an issue that we'll continue to see as a challenge. Consumers' rights around if they've been scammed and if their bank has any responsibility around that. So I think we'll start to see systems that start to help banks help their own customers who may be in the process of being scammed through multiple methods. And I think that's going to be really a big topic going into 2022.
Marianne just opened lines of conversation that would take another hour. So if everybody wants to stay on, we'll just keep talking.
That's right.
We could keep the line open for another 2 hours or so.
Yeah.
All right. Well, thank you everyone so much for joining. Thank you to our esteemed panelists. I see there are other questions that haven't been answered yet, so we will look to address those questions. And if you have other questions, you can email me at yuka.yoneda@proof.com. I'll help you get in touch with our experts to answer your questions. Thank you all so much for being here.
Thank you.
Thanks, everyone.